Remember, please hit like and subscribe for me. Thank you so much. Okay, let's go. Hi, everyone. Today is October the 2nd. It is a Thursday, and this is the Moneyball Morning Report for the Benzinga Pro platform. We don't have an employment number coming out, and as I mentioned in the long form yesterday that I put in several of our notes, shutdowns tend to lean the Fed dovish, which has pushed the market to the north, as I mentioned. This would be the most reliable motion as it goes, statistically speaking. And so as we stare at the ES, we're back to looking at the 30-minute chart, which gives us the framework. We know we've got a breakout of the formation. We've got a Fibonacci that gives us a price action event at 6,788. Currently, there are 1,000 contracts sitting at 6,779.75. There's a 500 lot and a 475 lot. I have no idea if they are entering into a new short or if they are trying to close a long. But the clear story is, what is trend? Up. We are above the VWAP. We are above our 63 moving average. What is our momentum? It is up. Let's take a look at the pre-market action. We have our first 30-minute formation giving us the statistical double break. It breaks above and below. That's got 85% certainty that it will do both of those. Our 30-minute closing candlestick formation is right up here where the VWAP is sitting. That high is 6,768. The breakaway line is 6,760. Deep support is 6,750. Dips are buys. Okay? We might be thinking, holy cow, what if the market rolls over? Listen, you follow the trend and you put your stop there. Of course, if you say, hey, I'm going to come back to, I don't know, let's say it's the midpoint of the 30-minute formation, and we go, I'm going to put an order in at 6,764. That's where my long is. Easily, you can see that your stop might need to be 5 or 6 points wide. I think that's probably a minimum requirement today in terms of the range of the ES on these 30-minute formations. So you want to watch for that? Listen, you could be right, you could be wrong. If you're wrong, your brain always goes, man, I wish I'd have taken that short. But here's the thing. The only thing that you have a surety of is where you can enter and where you can stop out. You have no control over anything else. Doesn't matter how much statistical analysis you use. Doesn't matter how many Elliott waves you count. Doesn't matter how many Fibonacci's you draw. The fact of the matter is, once you get in, it's going to be a good trade in terms of process. Otherwise, it might be a so-so trade because you're chasing price action. Now, if you decide, hey, I want to short this below the call wall. As it comes into 6,780, I want to take a short. So what normally happens as these walls? First thing that happens is they breach it. When they hit the wall, they will breach it and then have a reflexive motion around it. Here's what happened the last time we had the wall get tested in terms of a value area or call resistance or a high volume region, right? Here, it breached, pulled back, and then continued. That's all you know it can do. So if you're thinking to yourself, well, I don't know that it'll come down here because we clearly have a roll of buyers at 67.64, then, you make your decision there. That's why I chose this region around 67.64, because there's a clear wall of buyers. I know definitively that they are trying to defend that zone because there are no candle bodies under there. It's just pure weak action. So if you want to walk it up, you can say, hey, I want to use the last breakout zone as my old resistance, new support. So I'm going to put an order out at 67.71. What might your stop be? It's going to be the bottom of that range at 67.65. Again, 6 points of risk, and the continuation is upside. People are trying too shorts this, and every time they do it, they're getting crushed. So be careful, watch out. Where will things get sticky for us as traders? If we lose the 30-minute low of the overnight and we lose this closing zone in terms of settlement, there's going to be more bearishness. Right now, we have broken the high of the prior day, intraday, and so the pullbacks are going to have us generally continuing in that direction. 6,800, the call wall. So don't stare at the chart and disbelieve. Drill down and simply look for where the buyers and sellers are and estimate relative risk. All right? That's going to be the most important thing. Dips below give us 6,740, 6,750, 6,760, 6,764. Upper levels, 6,780, 6,788. Big call wall, 6,800. Do they want to try and get it there? Absolutely. Big competition, more upside on the horizon. Let's take a look at the NQ. Same sort of thing. Breakaway formation, right? Bullish, brand new highs. That's another thing we're looking at. Brand new highs. Take a gander at this breakaway from the value area. Let's just measure the value area in a Fibonacci. Notice it doesn't give us a clear wave per se because we breach value area high and we breach value area low. If that offends your sensibilities with Fibonacci's, then you can easily draw high to low, and you can see it coming up to 25,146. If you do it on the value area or the range of accumulation, you're going to bump into that same spot, 25,146. So what do you think people are doing? They're thinking to themselves, you know what? I'm going to try and short this. I'm going to try and short it. Guess what? Dips or buys. So if they short it, where are they likely to come? Take a look. Now notice, see how the first 30 minutes of the day, easily 40% more than the last 30 minutes of the day in terms of volume, they did not liquidate their positions. They're still long, right? Retail traders, in large part, I think they're the ones potentially putting this on the back foot, trying to short it. I don't know, though. It could be anybody. Seriously. It could be both of them. They might be trading things in different accounts, long in one area, short in another. There's nothing in the world illegal about me opening up a position at Interactive Brokers and going long, and opening up a position at Tasty Trade and going short. Okay? Nothing wrong with that. People hedge like that all the time. Okay? It's their own money, and they're doing that. All right. That being said, what do we have? We have the thought that, they might try to short that area. I'm getting two measurements that collide there. So 25,150. Do I want to short that? No. Because my suspicion is it's going to be a reflexive move into support. We are above the call wall. So, and this is the weekly call wall. This is a really big breach for this weekly call wall. This also tells me, hey, listen, there's a lot of hedging here that thinks we should have downside formations underneath this 25,000, but not happening, folks. So any dips, folks are trying to get it back under the call wall, and every dip is being thwarted. So I suspect by tomorrow, this call wall will be shifted to the north. We'll see. We'll see. Right now, dips are buy zones. Dips are buy zones. Lower level dips that give us congested support, that one's a little sticky. It could be as little as 25,050. It could be as much as 25,080. But clearly 30 to 40 points of risk with each NQ candlestick formation. So let the trade come to you, right? Unless you're scalping, and then you go, okay, clearly old resistance, new support. Maybe I'll put a position in here at 25,778, and I realize I've got 30 points of risk below, right? You could look at them starting to sell. Folks, Traders are simpletons. I promise you we are. We really, really are. But the people who try to short here are going to be flummoxed. One of my favorite words. Because the pullbacks are going to be buy zones. There's too much sitting here where the traders are literally on the back foot. And I suspect all of this buying is buying to cover, which means we're going to have sort of a flush event, but the market will tell you when that's about to happen. We'll stop making new highs. We'll break the support of the near-term candlesticks, and then we will begin to retrace. As of now, nothing. Old resistance, new support, off we go. Don't buy the highs. Wait for the reflexive motion, and then get yourself moved. Next line in the sand, 25,250. Next line in the sand above that, 25,330. Lines below, 25,046. 25,000 even. And then a little bit of stickiness right here. But the key number I would look for is old resistance becoming new supports in a breakaway formation. That is actually way down here at the closing anchor of yesterday's VWAP, which is 24,886. That's also the 0 DTE call wall, 24,870. Kind of a big deal. Kind of a big deal. All right. That being said, zooming through, let's go to YMZ25. Love watching Tom. Oh, my word. Look at where the put wall is, folks. Holy smokes. Let's hide that. Okay, look at what we can see. Big motion. Look what happens. Topping formation. Here we are looking at the YM. Very important structure here. This has happened to me looking at things going, all right, got a double top formation. We should move. We should continue moving in the direction up after it hits support because the overall trend is up. Look at the formation. One, look at the size of this wick on the YM. Monstrous. Absolutely monstrous wick. But they hold the bullish pressure and price action moves up. This is a double top looking at old resistance to new resistance. Trend, however, is up. Value area high to value area low, very wide. Notice the Fibonacci that I drew from way back in the day, 46,800, giving us that resistance zone in an otherwise bullish formation. Look at the wicks. This is what we have to consider. Are we above or below the VWAP? We're below it. Is the trend of the VWAP up or down? Well, it's up if you look this way and down if you look that way. And that's why we've got these wicks, right? Mean reversion likely, anchored VWAP from the close of yesterday, 46,600. Probably a bounce action event, but a lot of sellers trying to get positioned here. So what's the trade? This, folks, super messy. I would not consider shorting unless I got a retest that broke down under 46,752, and I would have to walk my targets in 46,700, 46,679, 46,625, 46,560. Very different to what the ES and the NQ are doing. That is supremely important. Here's another one. Here's our Bitcoin structure. Now, take a look at this. Big motion. Areas of accumulation. False breakout. That's a look above and fail. Liquidation. Areas of accumulation. Breakout. Distribution. More accumulation. More could be based on that accumulation. Breakout. That's our distribution. Pulls back, old resistance, new support. That's what's going on with micro Bitcoin. 113,605 baseline support. Accumulation, distribution, more accumulation, distribution. Okay, what we want to look for here at 120,000, remember this chart is in a very interesting zone. Very interesting zone. Overall, it is in a sideways formation, but the sideways formation is huge. Look at the size of value area high to value area low in Bitcoin. That number is 122,000 and some change on the top, and then all the way down at the bottom. Come on, Fred. Operator error, of course. Value area high, value area low. Midpoint, 107,000. Now, here's my thought. Liquidation is something that should occur at the top of these edges. Should. Okay? Here's where we are. Big box of accumulation. High area, 120,000. Look at that. Sideways. A break below and fail. A break above and fail. Here's the break below. Break into the target. Double bottom. Here we are sitting at this zone. This is a do or die area for the Bitcoin traders at 120,000. If they break to the north. The next line in the sand, if we're measuring value area high low, is 137,530. Do I think it's going there in this structure? No, I don't. Where are the potential regions to the upside where we're going to have trouble? 120,000 and some change. That's the first one based on all this accumulation here. Next one, high of the last region, or actually high of the value area, 122,300. Next area, 125,000. What is trend? It's flat if you're looking at the daily. If you go over here to the 30, definitely up. What are we doing right here in the pre-market? Accumulation of inventory. There's the box. What did the traders try to do at the first pass? Hey, we're going to the moon. Crunch. 120,000 top end. Buyers in a flat VWAP at 119,100. So, old resistance on the wicks. New support. Pullbacks into 119,000. Going to give us a very nice area with a stop that's not very big, right? Very nice formation. Here's the thing. If you've got an idea that we're going to have mean reversion, then wait for the fade or try to catch the top of the range. But it will require patience. We want to be very, very careful about patience. Targets below, 118,000. Anchored VWAP from the prior day, 117,264. Midpoint of the large range that we can see on the daily chart, 116,470. Point of control in VWAP, way below. 116,000 even for the VWAP. Point of control in Bitcoin, 115,100. Very interesting price action. Let's go to gold. Relentless buying yesterday. Let's take a look at this. Zoom out. When in doubt, and you go, what the heck is happening here? Find where they are building inventory. Looks to me like they're building inventory between 3,880 and 3,894. That's it. Upward trajectory. Let's take a look at where these call walls are. I don't do the intraday Mentor Q stuff because I have a ton going on here at my desk during the course of the day, but I have to tell you, they're very, very good. If you're willing to put the time in, it's worth the exposure. All right, so here we go. A lot of lines, very heavily congested. We can see the same box. So let's make sure we have the same box. We put it right here, right? 3880 all the way to 3894. Call wall 3900. The next gamma line in play 3925. Fibonacci extension 3943 to the north. The traders are going to try and battle at around 3920. This chart, I'm not trying to be a warmonger or anything, but this chart is typically, when things like this happen, it's typically called a war cycle event. And that means that commodities are going to start to heat up dramatically. Steel, oil, coal, anything you can dig out of the ground to make stuff becomes much more highly valued in a war cycle. Okay, so that being said, we don't know if it's a real war cycle. You know, those of us in Christ, we leave it up to him, and we just, the duty of man, fear God, obey his commandments. That's all I got. I got no control over anything else. Okay, so there we have it. Old support got broken down as resistance. Are there going to be sellers coming in here at 3,912? You betcha. But look at what the sellers have been able to do since they broke out. Absolutely nothing. So support 3,900, deeper support below, 3,905, deeper support 3,900. Look at how close the put walls are to each other today. That's 38.85, 38.90, right? Dips or buys, big inventory accumulation here, and chances are, if we get to the base and break down under this call wall, the traders will try to push it to the other end and create another buying opportunity, right? For the traders yesterday who did not realize that, one, the call wall is 3,900, and breaching the motion would push them up and then bring them down, they would not have picked up on the place to short is above the call wall, because we know what the traders are going to try and do. So we wait for that and we watch them go into the put wall, and that's our trade. Thank you. Good night. Same sort of thing happening today. We've got to wait for the exhaustion event and the confirmation under the call wall, or else they are going to be on the back foot and we're going to see prices drive higher. Okay? The goal for all of these traders is to distribute at higher prices, get the fade down, start accumulating at cheaper prices, and then distribute to the upside again. That's my thought. Okay, lastly, let's take a look at SPY. I know I'm moving at 100 miles an hour today. Thank goodness, my brain's actually working. Okay, here we are looking at the SPY, call resistance, 670. What are they doing? They're battling the call wall right now. They're actually up over it. So what normally happens when we get into this kind of space? Well, the first thing is, we do know what trend will have a tendency to do. We'll breach the call wall. We'll see if we can force an exhaustion mode to the traders on the buy side. We'll watch it fade, and then if we cannot break down below 670 during the trading day, we will move higher. Let's do Fibonacci. Value area high, value area low. What's the next line in the sand? 674, right? Is there going to be battle zone here? Absolutely. Fades give us buys. And in that framework, we can begin to go, okay, I'm going to put my buy order there and I'm just going to wait on it. Or I'm going to get up here and I'm going to put an alert that tells me, hey, you better watch what happens up here, because you could have yourself a scalp short. Look at the momentum. Look at this pre-market momentum. What is trend? Up. Where are we in terms of the VWAP? Up to sideways. This, folks, this is a buy the dip. These guys are going to have to roll their options up. I think these call walls are going to be very different by Friday. What is today? Oh, today's Thursday. Well, maybe they'll be different by Monday. But I believe they're going to move unless price action gets a hold underneath 668. And then what do? We test value area high as support, right? All the accumulation from the last several days sitting right in here. Look at the middle pocket, 662. Traders are feeling the heat since price action solidified at $660. All right, everybody, take it easy. Benzinga Pro guys, you know we've got a meeting this morning. Top Step VIPs, we got a meeting at noon. And then the rest of the day is compacted with X, Y, or Z. All right, everybody, take it easy. And I'll see you on the streams.